Welcome back. As promised, let's invite the management of TeamLease on the show now. The company reported the Q3 numbers. It was a good set of numbers. The top line growth for the company came in at 19.5% on a year-on-year basis, and on a quarter-on-quarter basis, top line growth was close to about 4.5%. The company managed to grow their top line by 19.5% despite a near 7% drop in the specialized services segment. Margins were stable at 1.2%. Ramani Dathi, CFO of the company, is now with us on the show. Ramani, it's a good showing, 20% top line growth. Do you have the visibility to maintain 20% growth in Q4? And what are you likely to end the year with? And what happened with specialized services?
Good morning, Rima. Yes, definitely the 20% top line growth is something that we are confident to maintain in Q4 as well as for next financial year. While we got hit with the BFSI, huge insourcing in BFSI segment for the quarter as well as in Q4, we are getting good contribution in terms of hiring volumes from sectors like quick commerce, e-commerce, retail, FMCG, and industrial and engineering. So with this 20% top line growth is something that we are confident of. Specialized staffing, almost after 8 quarters in a row, this quarter we have finally turned net positive in headcount addition, which is a very positive sign that we are seeing green shoots in IT hiring finally, and we are seeing the momentum even from IT services in small numbers. However, we believe that it may take another 1 or 2 quarters for large volumes of hirings in IT services to come around. However, GCCs and tech hiring in non-tech companies will continue to contribute towards in IT staffing growth. Specialized staffing, mainly because of headwinds in IT services segment, we have seen the drop of 6%. However, we are maintaining the profit run rate quarter on quarter, thanks to contribution coming from GCCs. And in terms of net profits, EBITDA this quarter, we have grown about, we have been kind of flattish, mainly because of delay in EdTech. That's one area where we fell short of our own internal estimates this quarter. Otherwise, at PBT level, we have managed to get to double-digit sequential growth, and PAT also we are maintaining double-digit sequential growth.
Can you repeat what happened in the HR tech where you said it's fallen short of your own estimates? What exactly happened?
Yeah. In HR tech, our main business is the EdTech business where we do build the universities for the student admissions and conducting online examinations for the distance degree students. So this year, because of UGC guidelines, many universities have to revisit their entire programs following the new education policy guidelines. So because of that, some of the large universities have delayed conducting examinations, because of which whatever billings we are supposed to do in end of Q2 and Q3 got deferred to Q4. On a full year basis, we are confident of maintaining 6 to 7% EBITDA in HR services. It's only a timing issue, not a loss of revenue or anything of that sort.
Ramani, you've also announced the acquisition of an 80% stake in Ikigai Enablers. Last time around, when you spoke to us, you had hinted at a couple of acquisitions in the pipeline. So what is it that you've paid for this particular acquisition? How does it help? And when do the numbers start coming into your top line?
Ikigai is a small entity and which is currently having about 20 crore in revenue and breaking even at bottom line. So we paid about 5 crore for the 80% stake in Ikigai. But more than the consideration, we are focusing on how we can leverage our existing client relationship in India and our delivery capabilities in terms of hiring. So we will use our India team to deliver for the open positions, mainly in Middle East and Singapore regions. So Ikigai is operating in both these geographies, and we believe we will be able to utilize this opening balance and build on top of that. While for the next quarter, there won't be any contribution from Ikigai, we are confident that for the next financial year and from there on, there'll be a meaningful contribution from Ikigai, both on top line as well as profitability for IT staffing business.
Is it possible to put a number? What is meaningful in terms of a contribution?
Yeah. On top line, currently, as I said, there are about 20 crore, and with the kind of discussion and pipeline that we have for these two geographies, we are confident of more than doubling that revenue for next financial year. And profitability, this business can maintain 7 to 8% EBITDA margins, and that contribution will be presented under our IT staffing segment for next year.
Okay, one more question. Last time around, there was significant impact coming in for the entire staffing space from the budget. So this time around, what is it that you're expecting from the budget? Any specific segments that you will be looking at, and what is it that we should be watching keenly?
In fact, in this budget, we are expecting more clarity on what was announced earlier, especially in terms of employment-linked incentives with respect to EPF-related benefits and other subsidies. Because while the announcement was made few months back, so far there hasn't been any notification or any kind of guidelines on how those subsidies would be implemented. So we are expecting that in this budget, there'll be more clarity on that front. As well as on the internship and apprenticeship programs, we are expecting more clarity in terms of the subsidies or the directories to the companies on what percentage availment can be done for apprenticeship and internship.
But has there been any benefit seen in the last 1 year based on the budget announcements, or because of lack of clarity, there hasn't been any movement on it?
Yeah, as of now, there hasn't been any movement. I think we need the notification on how these programs are going to get implemented. So only then we can actually assess what can be the potential upside on these initiatives.
Okay, so going forward, FY25, FY26, could you give us a guidance in terms of where exactly you expect to end the year, including all of the acquisitions in terms of top line, margins, as well as bottom line, both for FY25 as well as FY26?
FY25 and 26.
Ramani, we can't hear you. Okay, but she did indicate that they will be looking at a 20% growth in Q4
right.
and even in FY26. Ramani, you were telling us, and even give us a margin guidance.
Yeah, because I think margins is something that the street is looking at.
Yeah. So Q4, we are expecting a very steep improvement in the margins as well as absolute profits because, as we mentioned earlier, the entire profit of EdTech cluster has been lumped into Q4. So we are expecting.
Oops, we can't get through, but TeamLease, again, just to reiterate what she said so far, 20% top line growth in Q4, confident about achieving that in FY26 too. In Q3, the margins were a bit suppressed, particularly in one of their verticals, the EdTech comes in HR Tech. If you look at the different verticals, there were some headwinds there, but all those, it just got delayed, and therefore it will be accounted for in Q4, and therefore the company is expecting a pickup in margins in Q4. But that's TeamLease for you. It's been a fairly good quarter for the company. For the market, still holding up with a gain of close to about 0.5%. The Nifty is at 23,280. It's been a stable, positive morning so far. Get into a break. We'll come back with more.